Good morning, everybody, and welcome to Beat the Bell. Happy Friday. Hope that everybody had an awesome week of trading. The market just sold off due to PPI coming in hot, 7.4% versus the expected 7.2%. We're going to talk about that a little bit more in just a few minutes, but first, let's introduce our panel. Who do we got with us this morning? Starting with Coach Dipka.
Good morning, guys. Good morning. Excited to be here. Thanks for having me on.
Noah, what's going on, brother?
What's going on? Alejandro, excited to be here. Let's get after it.
Money Mander.
Good morning. Market Catalyst into 0 days today. You know I'm excited.
And Ramsey Rippers.
You guys see these bags under my eyes? You know what that means? We were up all night. Hard work, determination, dedication, resiliency. Crunching charts. Let's go!
All right, let's go. So, as I was mentioning earlier, PPI, what do we got? Let's go straight into Fed forecast, economic outlook. Money Mander and Diamond Trades going to give us the rundown.
Yeah, for sure. So let's start with the past couple of days since the last time we saw you guys. The indices snapped a 5-day losing streak yesterday, led by gains in the NASDAQ. Growth concerns have really been the focus over the past couple of trading days, several trading days, with layoffs at huge heavy hitter companies like Morgan Stanley and PepsiCo. Market strength off the lows has really given investors an opportunity to take some risk off the table ahead of this really important inflation data that we're getting today, that we just got 7 minutes ago. And then for next week, right, on Tuesday for CPI. This rally has really been hinged on hopes that the Fed has been getting a handle on inflation, right? And they recognize this, and so that they'll be able to sort of relax with the financial tightening. But we'll see if that is going to be the case. If it's not the case and we get strong inflation data or hawkish comments next week in the FOMC minutes release, it could set up for a nasty reversal of this narrative. But let's go ahead and dive into PPI, which again came out about 7 minutes ago. Let's see. PPI came in at, and we already saw the reaction there as well, Ryan. If you want to throw up the reaction chart, the market sold off a little bit. PPI came in at 0.3% month over month, which is basically in line with expectations. Core PPI came in at 6.2% year over year, which again is basically in line with expectations. Consensus was about 5.9% to 6.1%. So slightly outside of that consensus range, but still pretty much intact, and also down from 6.7 in the previous reading. And so not much news there. It's pretty much came in as expected. And so I think that now the focus will shift to CPI, which comes in on Tuesday. And again, the FOMC meeting, which is on Wednesday. We talked about this last show, how the PPI year over year has sort of peaked since March, especially as we come into 2023 with those elevated comps from early 2022. You're going to see that year over year number continue to decrease. What's really important to watch is that month over month number, and to see where PPI is headed on a month over month basis. And it looks like, as of for now, we're remaining pretty much in line with the trend that we've seen going forward. And I would also mention that month over month PPI actually bottomed back in August, and we've really sort of seen slight increases since then. So it'll be interesting to see how that trend continues to play out as we head into the new year here.
Yeah, inflation data is honestly going to be everything moving forward, obviously, because we've had this narrative and this rally off of the inflation getting hit, exactly like you said, inflation getting curved by the Fed. So, hopeful pullback in interest rates, right, coming up in December. Markets and Mayhem actually did the rough work for us here at Diamond. As we were speaking on last week, when we have VIX roll over into demand here, he actually did the homework for us over the weekend, saying when the discount between realized volatility and implied volatility gets greater than a -7 point, we have a 64% chance of a negative 5-day return. And so I wanted to pull up this chart for me, Ryan. He actually did the homework for us here, as we were discussing last week. As we got down into demand on the VIX there below 20, really, where we got into the situation where we would have the likelihood of realized volatility being greater than implied volatility, we actually just had the first 5 red days to start the month in the S&P 500 since 2011. And as you hit on that, right, had a green session yesterday breaking this 5-day trading streak. But how wild is that, right? And so now we still are kind of in this point where implied volatility is relatively low, trading here at under 23 to start the session, even after this sell-off in the pre-market, with a lot of catalysts coming up, right? We have CPI on Tuesday. We then have the FOMC meeting coming up after that, I believe next Thursday, correct, is the release. So, really at a teeter-totter here in the markets where I think if CPI comes in really light, where the Fed has, ultimately probably hit peak inflation here, rolled us over, where they can come in with this 50 basis points as priced in and give more outlook on the terminal rate, we're really poised for a rally here with the VIX trading so low. And that being said, on the opposite, right, if we see a CPI and especially a core CPI come in heavy next week, I think we're really, really poised here to roll over, especially under 3,900 if that cracks.
Right, and that's exactly what I talked about before, right? With the real rally sort of stemming off of the fact that we think that we've got a handle on this inflation. And I think it would be a punch in the gut if we winded up not having as tight of a handle as we thought. So I just wanted to actually check myself and make sure that I was accurate with the month-over-month numbers. So July PPI month-over-month minus 0.4. We come into August, it was flat on unchanged month-over-month. September, October, November, 0.2, 0.3, 0.3, all increases. And so we've been seeing this month over month has really bottomed and started to trend higher since July. So it's going to be interesting to see how that plays out. Again, these year-over-year numbers are really expected to come down as you're comparing them with inflated numbers from early 2022. So it'll be interesting to see what this month over month number continues to look like going forward. I think that'll be a better tell on where inflation is headed in the economy. That's going to wrap it up for Fed Forecast today. We can go ahead and pass it back to Alejandro.
Beautiful, fellas. Thank you. All right, guys, let's move over to the system now. So today is really interesting, especially with PPI. And it's part of the reason why I decided not to trade or not to take a long overnight. So we closed above the 50 SMA on the 30-minute SPX chart. Typically you would see that and you'd say, okay, well, it's time to go long. The market is changing short-term trend. It looks like we're going to get a buy signal. Let me try my chances in longs overnight. A couple reasons why I didn't do that. Number one, when you only have 30 minutes left in the session like we had yesterday, taking a long with expectations at that same trend when there really was no trend, as you could tell, yesterday was a choppy day, is going to continue into the following session. That to me is a low confidence trade. So what I would rather see is the market open higher and then I would get into a long because that would be higher confidence. The market is showing strength. Why not wait for the market to show you that strength versus just gambling, right? Another reason, of course, was PPI. We know that PPI was going to move the markets. The market ended up selling off, and the market is trading lower as we speak. So that just goes to show that the best trade was no trade because going into an economic data release, as I always say, it's best to be in cash. It's best to wait for the market to show you its cards. So now that we're trading lower and we're not going to get that buy signal, at least at the open, what does that mean for us? Well, we know when we're trading below the 50 SMA and the 30-minute SPX chart, we're looking for opportunities to go short. And that is confirmed by the hourly chart, of course, trading below the 50 SMA. Watch to see if the 10 SMA on the hourly chart can serve as resistance today. I'll be honest, guys. I think that the best play early on is going to be to let the dust settle. We want to see the market, if it's going to develop a trend, first show us that trend. The move or the initial reaction you get in the pre-market after economic data, it may not be a true move, right? The market reacts quickly. There's algorithms on the data releases, and it's not necessarily it doesn't necessarily provide me conviction on the direction that the market's actually going to trade for on that day. So I'm going to give it, maybe a 30-minute candle, an hourly candle, watch for things to develop. If there's a nice looking trend for, headed lower below the 50 SMA, breaking through some key support, that might be a good spot to take some shorts. Of course, the better trade and the trade that I've been waiting for has been the break over the 50 SMA and buy signal. That would be the market showing us, okay, we had the sell-off Monday, Tuesday. Now it's time to make up some of that ground, but we haven't gotten that yet. And I haven't traded the past 2 days. I can talk about that very quickly as well. We got this really nice downtrend, guys. And look at what happened with the 10 SMA. Served as resistance, trend resistance, until finally it was broken, okay? And once it's broken and the 10 SMA starts to flatten out, that's the market showing us, All right, that's super easy trend to trade because it was easy. We got short and it was a 2-day sell-off. That is over with, and we have to let the market kind of digest the move. So if you're not careful, you gave back all those gains from that short trade, either trying to short again or trying to long in the chop. It was not easy to trade these past 2 days. That's the reason that I sat out. So to cover again what we're looking for today, let's watch to see what the 50 SMA and the 30-minute chart is doing. Let's watch to see what price is doing early on in the session, giving it a half hour, an hour or so at least. And then we could start to analyze, all right, what is our next best move? All right, guys, everybody got it? It's been a good week, guys. I mean, again, with my style of trading, and you guys have to understand, people make money in different ways in the market. Some of our traders, Coach Dipka, namely, is a really good scalper. He scalps. He's taking, 4 or 5 trades a day. He's looking for smaller moves, and he does really well doing that. My personality, I like to go for those larger moves, and I just trade the system. I trade what the system is telling me to do. I kind of try to take that bias, my own personal opinion, out of the trading. And if that means that I don't trade for 2 days straight because the system's telling me not to, because there's no real opportunity, that's fine. I mean, you might look at other people who are trading and making money and you might get that FOMO, but you got to be able to fight that. Always trading your plan is going to help you out in the long run, guys. Okay. Now we're going to go over to Ramsey for Bet the Bell. Ramsey, what do you got for us?
Segment today, Bet the Bell. Clearly, look at that beautiful face frozen on the screen. Admire it. Keep staring at it. It'll come back. So listen, guys, first question of the day. Obviously, our PPI data comes in. The market's selling off just a bit. What I want to know is, are we going to finish green or red today? Let's start off with you, Money Mander.
I think you got to roll with the trend here, right? I'm going to take red. We've been selling off already coming into PPI, and then we have bearish PPI data come out. I'm gonna roll with red.
Rolling with red. Diamond, talk to us.
I'm going to roll with red as well. I mean, I think, like I said, this is really an opportunity for anybody who's involved in this rally over the past, call it 3 weeks, month, to really take some risk off the table ahead of next week's massive data release. I think that they're going to take that opportunity, and we'll see a red day today.
Come again?
I think he said me. Listen, I had one loss recently. I've been on a hot streak. I don't want to get ahead of myself and play the, what's too obvious here. I'm actually surprised we're not selling more right now in pre-market. PPI came in hot. We had a run up beforehand, expecting that we would come in low. So I'm actually really surprised. We're only down 0.4%. It's actually kind of concerning me with this bet. I think this is a tricky one for that reason. But the charts are telling me down. We broke that rising wedge on the daily, and you just can't ignore it. I'm not gonna fade it right now. And I'll admit to being wrong if we reclaim 395.50 today. Gotcha.
Yeah, and that's why this question is still intact, right? A lot of the times where we have to switch up this first question, green or red, for more of like an over/under due to this economic data. But the market did open up almost up about 1% this morning. So now the sell-off, we're lingering around 0.5%, about 0.3. So that's why we're able to ask this question. Alejandro, finish it off for us. What do we got, green or red today?
So I'm gonna go red, but I don't think that it's gonna be like a big red day. I don't think it's going to be tradable, quite honestly. I think it's going to be tough there. I mean, as Coach was saying, it's like the fact that we're not selling off hard right now is telling. So we could see a little bit of recovery. The reason I'm saying red is because the system's still in the sell signal, but we do have some pretty decent support here, and it's Friday, so I don't know.
Gotcha. And that makes sense. I mean, the market's got to find a base, especially off of such a crazy sell-off. What was it, Tuesday, Wednesday, or Monday, Tuesday, 100 points plus in 2 days. So this is going to lead us into our second question. Now, I asked you guys this question about 3 weeks ago, 20 to 25 points ago on this particular stock. Ryan, show us the chart, show our members and our live viewers the chart. In the video, everyone's paying attention to it. So if I break it down for you real quick, we had this big gap down on the daily on this $150 level. continued higher lows. Once we broke through that 150 gap fill level, we got a nice little break, hook, and go. You see that little blue shaded line on that gap fill level, the gap fill, break, hook, and go strategy. Continued higher lows, false breakout of our trend line yesterday, reclaimed, absolutely nuked through it. I mean, guys, before this data, we were testing 173. That was our highs of this current range that we've been in off of lows, up about 75% off of our lows just a few months ago. Is the bottom in on NVIDIA? Mander.
This is a tough one because I think this got really beaten up early off that China-Taiwan war conflict kind of headlines that were circulating, where on top of the broader market sell that we had, this one also got sold on sector-specific bearish news. So that's a really tough one where I don't know if it's, totally in. I guess for the segment, I'll say it's not in, but I don't really know how much lower it goes beyond that, even if we get another sell.
Hey, Ramsey, I actually feel bad for Mander here because he is the ultimate perma bear. And I feel like after I really put him on blast, we took old clips of him being wrong, put him on blast. I feel like he's scared to express how he really feels. I don't think this thing's going to the ground on you, Mander.
I just want to own the video. This had nothing to do with you put me on blast.
Is this foreshadowing of a little coach's corner after Bet the Bell?
Unsuspecting. I don't know what goes on there. I get dragged in every day, not knowing what I'm going to be asked, and I put up a fight as best I can.
Gotcha.
Listen, you're the best in the business, Mander. That's why. We'll wait for CPI, Ramsey. We'll wait for CPI Wednesday.
All righty. Hondo, talk to me.
I'm gonna go yeah. That's it.
Simple, sweet. Love it. Keeping it simple, sweet. Diamond.
I'll also go with yes. Stock was down like 70% from peak to trough, from highs to lows. That's pretty fat. I think you also like the fact that I love Mander's point, the fact that it wasn't just like the market selling off that caused NVIDIA to sell off. It was also like sector specific news. I think that's going to play a role as well. So I'll say yes for the time being.
All righty. And this leads us into our last question of the day. We got a little Bet the Bell, Cane Cap twist on FMK. We're going to do a love, marry, kill segment on 3 of our trading strategies. The first one we're going to talk about, we got the system. Alejandro obviously uses it every single day, every single week in the Discord to make his trades. That's his big strategy. Number 2, we got Dipka's Golden Goose, the 21 EMA overlapping a fib. I believe we had a nice play on the Golden Goose earlier this week. Was it not? 35, 40%, something, a couple weeks out strike. And last but not least, Mo Mama's infamous break, hook, and go, which we all use. We all love it. I don't even know if I don't think we got to ask Alejandro this question. Do we? Hondo, start it off for us.
All right. I'm obviously going to marry the system. Like I might actually do that. Like outside of like this segment, like I love the system, guys. I love the goose. The goose is sick. I mean, the thing with the goose is we don't get one very often, but the hit rate is nuts. And I'll never forget, and I'm sure Dipko remembers it too. It was like months ago, earlier in the year. It was on a Friday. We all went balls deep short on a goose trade. And all the head traders made 4 figures on that trade. And it was so sick. And that's when I really fell in love with the goose. It's a really good strategy. I'm going to have to kill the break, hook, and go. I don't know. It doesn't have as cool of a name as the system and the goose. It's obviously a great strategy, but it's simple. It's back test of support, resistance, and go. You see that every day. There's nothing new there, right?
Alrighty. So he's loving the goose, obviously marrying the system, killing the break, hook, and go. I see Dipka smirking there. I think he's got something to say with respect to this.
Oh man, Dwayne. I'm sorry, brother. I know.
Watch your fucking mouth. Watch your mouth.
But the system, man, it's gonna have to go. Nothing personal here.
There's no way you're killing the system.
Nothing personal here. It's my preference, not my type.
You're
the
so
goose.
Full of shit. The only reason you're saying that is because you want the reaction out of me.
No, I'm being genuine. Like my trading style, the 2 strategies I use are the break, hook, and go, and the goose, right, on a day-to-day basis. So that's really why. the goose is the best strategy out there, in my opinion. It's just very rare. It has many points of confluence. I think those are the best trades. You have 3-4 reasons why a price should reject or bounce at a specific level. 3 or 4 reasons why that should happen at the exact same level. Doesn't get much better than that, guys. So the golden goose is number 1 for me. Break, hook, and go. And the golden goose doesn't get around, so that's probably something you're going to marry. Love, you're getting a one-hit wonder on the break, hook, and go like yesterday. The system, love the system, but it's just when you're in a pool of absolute winners here, it's hard. Even the best are going to not make it out on top. So
pretty easy for me.
Go for me.
Oh, man. Coach Dipker just gave you the classic. With all due respect to the system, fuck the system. All right, guys, that's going to wrap it up.
We're going to make a separate system channel in the Discord that Dipka can't see, that he doesn't have access to, since he finds it to be so useless. And we're all gonna rip. And every time we rip a system trade, we'll come back to him with an FU with all our gains, shove it in his face, and then maybe he'll have some more respect for the system. This fucking guy.
I have respect.
You think the guys you work with. I've known this kid for so long now. Went to college together. You think we're really good friends, and he comes on our live show, says he's gonna kill the system. Unbelievable, dude! I'm never letting this go.
It was tough for me.
I'm never letting this go.
I got to be honest with the people. This is probably going to cause some division, but it's all good.
Hey, we'll deal with it after the show. You guys are going to have to get into a room and talk about it. Hondo, take it over.
All right. Phenomenal segment there, Ramsey. Let's go over to Noah now, who's got some unusual flow for us.
Yes, I definitely have some unusual flow for us, so let's dive into it. We had some interesting floor trades yesterday on Microsoft. We had 418,000 and 270,000 on the Microsoft 280 and 300 puts respectively. Both of these puts are expiring next week, so short-dated put activity, floor trades as well. We like to find trades from floor traders as they're often some of the better performing traders in the market. The 300 put trade was actually confirmed by UW as an opening trade. The 280 put was likely also an opening trade, but was not confirmed by UW. We'd have to check the open interest for confirmation there. These large bearish bets, so about 700 K in total, come after the FTC announced an antitrust lawsuit against Microsoft over their $70 billion acquisition of video game maker Activision, citing anti-competition concerns. The stock recently broke the daily chart support of its rising wedge and starting to fall out. The FTC suit may be the catalyst that is needed to sort of confirm this trend break in Microsoft. So we'll have to watch this one in the days coming. One other thing that I find really interesting about this trade is that we had this news come out yesterday. Obviously, it's going to be bearish on the stock. It's going to act as an overhang on the stock in the coming days. We've actually seen short interest volume nearly triple since the start of December alone, jumping from 0.07 on the last day of November up to 0.2 just on Wednesday, right ahead of this news. So I don't think that you see that sort of increase in short interest. You see this large bearish trade from a floor trader. I find it hard to believe that it's a coincidence that these come right before or right as the FTC announces its lawsuit. We'll have to see how the stock reacts in the coming days.
All right. Thank you, Noah. All right, guys, let's do member spotlight now. So as you guys know, anytime we see members who are outperforming, who are, not necessarily in reference to the market, but just putting in lots of time and who are improving personally as traders, we like to highlight them on the show. And this morning's member spotlight is going to go to Link Snipes. Link Snipes, the man. Run it, Ryan. Link Snipes, well done. Well done. So, I mean, for starters, when we go in the gains chat, you're always in the gains chat, and it's really about the consistency, which is impressive to not only me but the entire team, which is why we came together and decided to give you the award. I noticed in your futures account that you've got that sort of base hit mentality, and you're slowly but surely growing that account, which I think is really, really awesome to see, because a lot of people have that mindset of let me make as much money as I possibly can right here and right now. And you're clearly very dead set on creating that process, developing that process, and building your confidence, knowing that if you can hone in on that process later on in your trading career, you're going to be able to make a ton of money. So that's what we're really impressed with, man. Keep going. Fires us up. It's awesome to see that you're benefiting from the Discord, of course. So Link Snipes, once again, congratulations, man.
There you go, brother.
All right. Now, guys, we're going to do Dipka certified levels of the day. Coach Dipka, take it away.
Yeah, good morning, guys. Can we roll up the levels here? We're going to set the timer to 60 seconds. You know the deal, not a second over. We got 60 seconds. Let's go. 395 supply. So this is an actual, I did this while the show was going on because I want to get you the most accurate levels possible. You see the kill candle from PPI that just came in. So we are currently trading under 395 to 395.50 supply. Now we have to keep an eye out for this level. It's been massive. Okay. If we reclaim 395.25, 5-minute candle close, break, hook and go, retest, I will look for longs, and we're likely to see a really big squeeze. We had PPI come in hot. We didn't see a really as much of a drawdown as I expected on that news. So, that means a squeeze could be brewing. I think it's unlikely, but if 395.25 reclaims, I'm getting long. Now, I'll watch it for a rejection initially, so I'm put bias there at first. If we reclaim it, though, watch that break, hook, and go around that level. It's been very key. It's given us many setups this week so far. Now, we're kind of sitting in this 391 to 393 demand zone. I foresee chop in that zone. I want to avoid that zone personally. Maybe some good longs at 391.64. 391.64 is our fib. Going to keep an eye out for that. That's also the bottom of the range. I wouldn't personally, I'm not going to be getting long around 393. That's going to be flirting too close to a breakdown towards that 391.68. So the last support of the day is 390. That's our daily level, our big fib. I will say, if we do get down to 390, what does that show you on the higher time frames? That's going to show you lower lows on the chart on the daily. That's going to show you lower lows on the 1 hour. That's going to show you lower lows on all the smaller time frames. So if we get down to 390 and that breaks, I mean, that 381.14 gap fill is looking likely in the coming days. Now we do have CPI on Wednesday, so we'll have to see. But just to recap, 390 support. I really want to see 391.64 hold. Big resistance is going to be 395 to 395.50, and I'll watch that as my top watch for today. And as always, guys, 60 seconds, not a second over. Nicely done. Got your levels. Everyone should be ready to go for the day. I'm fired up, and we'll pass it back to Dwayne Trades here to tell you about the system and put you back to sleep.
All right, guys. So because of PPI this morning, we won't be doing any top watches. Given that, anticipating the economic data release, we weren't sure how the market was going to move. So that's going to do it for today's show. That's going to do it for this week of Beat the Bell. We hope that you guys enjoyed this week's episodes. We had a lot of fun doing it and putting them together for you guys. For those of you that don't know, the 5 of us, plus 2 more, Stock Sniper and Mo Bamba, trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com to join. Have fun trading today, guys. It is Friday. Take it easy. Don't give back the week's profits. Don't try to be a hero, but let's try to make something happen today. Hope everybody had an awesome week, and we will catch you back here on Monday morning at 8:30 a.m. Eastern.